Yes, they can, but some term policies do not allow for conversion options.
Well,
Some
Cynthia, that's
do.
why they have to come to you. I mean,
Exactly.
we're away from the click and buy, and we're on to Cynthia Tan
Right.
at New York Life, right? And so
Yes.
she's going to take you to the right policy.
Right.
So that being said, so you're 18 years old. You buy a term
Term policy.
policy, which is less expensive,
Yes.
but it locks in the health benefit,
Mm-hmm.
right?
Right.
And so let's say you turn 30
Mm-hmm.
and decide to get married,
Right.
and you need, a broader
policy.
permanent policy. And so you can convert that policy
Right.
into a
Permanent.
permanent policy, and the health portion of it is locked in
Right.
from when you were 18.
Yes. Yes.
That is a beautiful
So
thing.
that could work for the young ones and also for families who are tight in their budget right now.
Yes,
I tell them just get life insurance because you know what? You have children.
that's right.
You have this kind of liability. You need to
Yes.
make sure if you die prematurely, that is taken care of.
Yes.
Now, later on in the future, when the finances become better, the budget becomes better, or
Mhm.
even for a young person, now they have a family and now they have a better income,
Right.
then let's sit down and look at converting that into a permanent policy. Permanent that now would last you a lifetime.
Now, how often should your life insurance agent be in contact with you? Because, like you said earlier, you really should do a
Mhm.
check-in once a year. So,
Yes. Every
should your
year.
insurance agent be calling you and saying, "Hey, how are things going?
Yes.
I just want to do a quick check-in and see, has anybody had any children?
Mhm.
Whatever the questions are. What's changed in your life?
Right.
You know,
Or you
did-
could change the beneficiaries
that's the
of
other
your,
thing,
of your life insurance policy.
right?
Every year, it's a yearly
So-
contact with your life insurance agent.
Right. So little Billy
So-
might be in this year and out next year.
Yes. Yes.
Wow.
It's a yearly conversation.
Okay.
And again, your life changes. Your financial planning, life insurance planning changes every year.
That's right.
Depending on what's happening to your life.
That's very
You
true.
could have a new job right now. You could have another child. You could have another wife. You could have different, different things that happen in your life that
That's the other
affect your
thing.
life insurance plan.
Yeah. And you said that you could have a different wife,
Yes.
a different life, a different wife.
That just rhymed.
No, but it's true though.
Uh-huh.
Yeah.
Yes.
So you need, if you get a new wife, you need to check in and get
Yes.
some new life insurance.
Change the beneficiaries.
Change the
there.
beneficiaries, because the new wife will be a little upset if the old wife gets the money.
Yes, yes.
So, so things change.
Right, things change, and it's very, very crucial to look at the beneficiaries,
Mm-hmm.
to look at if it's a permanent policy, how's the cash value growth, ownership of the policy. If you're buying a policy for your child, is your child old enough to actually own that policy, or is that something that you still want to take ownership of before you give it to your child? So different ways of, different kinds of conversation, but it is a yearly conversation with your life insurance agent. The relationship with your life insurance agent, the moment you start getting one, will be a lifetime relationship.
That's right.
It will be a lifetime relationship.
If it's a good agent, Cynthia.
That's why they need to
Some of
talk
us,
to me.
exactly. Some of us are changing
Mhm.
as we speak.
Right.
So
Right.
seriously, because, watching this, on the YouTube channel, somebody's going to get up and go,
Yes.
wait a minute, I haven't heard from my agent in 5 years.
Mhm.
I've had 2 kids that they don't know about. They
Oh.
haven't added them to the policy.
Uh-huh.
I mean, it could be that extreme.
Right.
And so you have to check in every year. That's a good one.
Yes. So, right, if there's another child, then make sure that you put that child in the beneficiary.
That's right.
Because otherwise, my goodness, if there's no correct, if that beneficiary form is not completed correctly,
Mhm.
after all is said and done, if it's not done correctly, your life insurance proceeds will go to the state of California.
Let's say
So-
that again.
So, for instance, I have a child,
Mm-hmm.
and that child is my beneficiary.
Right.
I only have one beneficiary there.
Mm-hmm.
I pass away, and the child passes away with me.
Mm-hmm.
Now, there's no contingent beneficiary. So that life insurance, first and foremost, goes to the state of California.
Wow.
So it's the state of Cynthia Tan now, who's now deceased,
Mm-hmm.
but unless somebody's actually going to
Claim it.
claim it, now they have to go to court to prove that, that other person or that other entity actually has control of that life insurance benefit. It is very, very important. I have come across so many policies.
I bet.
Okay, perfect example again. This is just a client from a couple of months ago who wanted the life insurance to be reviewed. The owner of the policy, so his mom bought this life insurance for him.
Right.
He's now 55 years old. Okay, the mom passed away. Now, the beneficiary on that policy is him, but he cannot do anything about it because the ownership of that policy is now state of California, even though he is the insured. So he was not the successor owner of that policy.
Oh my goodness. So his mom bought the policy for him.
Yes.
But she was the owner of the policy, not him.
Not him.
And
not
so
him.
when she passed away,
There's no owner.
there's no owner. So the state of California
Yes. The state of California takes over.
takes ownership.
Right, takes ownership.
So now when he passes away, the state of California is going to get paid?
Well, when he passes away, at this particular point, there's no way that he could even change the beneficiary.
Wow.
So when you do life insurance, especially for children, there has to be a successor owner all the time because you know the parent will die first before the
Right.
child. So in that particular case, well, turns out that this policy is a huge cash value. Remember, he's 55 years old right now.
Right.
The mom bought it 55 years ago.
Exactly.
So now there's a huge cash value that the insured cannot even get. So New York Life will not even give the money to him because he's not the owner.
That's right.
So it's all there's a lot of legal entities now involved in this particular case.
Right.
But at the end of the day, ownership of a life insurance policy is crucial.
And at the end of the day, you should have an insurance agent.
You're right.
It's even more important to have an agent and not being on the internet somewhere clicking away because it
Yes.
sounds like it's going to be less expensive. You know, when in actuality, you don't know if it is or not if you didn't talk to an agent.
Right.
Right?
It's
That's
it's not just a simple death benefit.
That's
You-
bad.
Mhm.
That's really bad. I mean,
and a lot of parents actually buy life insurance for their children.
right.
Then they have to find out, okay, what if something happens to me prematurely? Who's going to own this policy right now because my child is still a minor? That has to be written out there to make sure that that policy is still in force even though the parent is no longer.
You know, I'm just so happy that you're doing this for us, Cynthia. We at Lunch with the Finance Bunch are so happy to
Thank
have this
you.
information
Thank you.
because you're teaching me things that I didn't know. And everybody in the room that can't be seen is shaking their head yes because they're all learning. I can always tell when the crew there's a light bulb moment going on. I can see it, right? They go, wait a minute. I'm underinsured. I'm going to need to. You're going to have a line outside when we when we
Right,
exit
right.
here,
And we have
asking
to talk
questions.
about underinsurance as well.
Yes, and so we have like 10 minutes left. Let's talk about that.
Well, just briefly, people always ask me, how much life insurance do I need?
Right.
Okay. Again, it's a lot of conversation because I would ask you, what's your income, what's your liabilities, everything. We're talking about future income just in case you're gone. But normally, you know, if you just look at the before 9/11, everybody's saying you just need 3 or 4 times your income in order to survive. Now they're looking at what, 10 to 15 times your income.
Right.
So just to give you an example, supposing you're making $100,000 every year, you are the ATM of the family.
Right.
Okay. Regardless of what happens, you know, you have to put $100,000 on the table. If you only have, let's just say, $500,000 of coverage, and you die prematurely, so $500,000 divided by $100,000 of income, that's 5. So that means you only have 5 years worth of life
coverage
insurance
for your family
For your
who's
family.
living $100,000 a year lifestyle.
Yes.
And
So
that's
think-
not a lot of money. I mean, it sounds like a lot, but it's not because that means they're living $100,000 lifestyle. They have, you know, a
home.
mortgage. They have a car note. They have, you know, ancillary bills. They have,
Right.
you know, the lights have to be paid.
Yes.
Food has to be purchased. Some kid is in school somewhere,
Yes.
you know, buying school clothes. Oh my goodness.
So think about it. After 5 years, the quality of life of that family
Drastically changes.
Yes.
Well, it changes
Yes.
right away because if the woman or man, whichever the case may be, is savvy, they realize that
Right.
okay, we only have 5 years of money left. We need to cut this budget in half,
Yes.
things change immediately,
Mm-hmm. Uh-huh.
So yes.
That's why, America, again, there's so many people underinsured, uninsured and underinsured.
And underinsured.
So, and that's really one of the things that we have to inform everyone why life insurance is so important. And if you actually talk to someone about life insurance, how much do you need in order to make sure that whoever will benefit from that death benefit will have the same quality of life?
Yes, the underinsured part is another big one because, like you said, the ATM of the family.
Yes.
You are the family ATM, male or female.
Mm-hmm.
If you're the one that person depends on, relies upon, and something happens to that person, the whole quality of life for that family changes.
Right.
And like I said, people don't like to talk about it, but a person could go to sleep tonight and not wake up in the morning. And the whole lifestyle of the family has changed if you're not prepared.
Right.
That's
So,
amazing.
Yes. It's not really, again, to scare people about.
No, it's not a scare tactic at all. It's
reality.
It's reality.
Mhm.
I mean, I have a friend who I saw one day, perfectly fine, perfectly healthy, and had a stroke the next day.
Mm-hmm.
Life changes quickly. Thank
Mhm.
God they recovered, but you never know
You
from one
never
day to the
know.
next. So let's protect
Right.
ourselves, please. Cynthia,
I
give us your contact information again.
Okay, this is Cynthia Tan again. You could check my website, www.cynthiactan.com, or you may call me directly at my office, 323-782-3263.
Love it. Okay, so I cut you off from saying something. I'm sorry.
I was just going to tell you, a friend of mine passed away. He died in his sleep.
Yeah.
And luckily, I'm the agent of the family.
Mm-hmm.
And when I actually found out about it in Facebook. I called the wife and I told the wife, "Don't worry, your husband did the right thing for the family."
That's a call you want.
Oh,
You don't want that other call
no.
saying, he didn't tell you.
You know what she said though? She said, "Thank you very much for being persistent."
See.
So, and that's the reason why I do this.
Yes, because people get comfortable
Yes.
and we think we are invincible. We do. We don't think about the
Yeah, we don't.
alternative. We don't talk about the alternative, right? So it's very important, ladies and gentlemen, everyone listening to us on the radio, everyone on YouTube, check it out. Talk to Cynthia. A conversation is free.
Yes.
If you have a policy, let her check your policy out to make sure that you're not undercovered, that the beneficiary is who you want the beneficiary to be, that the owner of the policy has it transferable to the person who is meant
insured.
who is insured. We've learned so much today, and make sure that you still have a policy that hasn't lapsed. Make sure that what the work policy that you have, if it's term, you need your own policy, or you
right.
need to know whether that one's transferable. These are all questions we leave to other people, so make sure that your life and your policies are intact and that your family is protected.
Right.
And single people, if you don't have a family yet, you're still going to get older. Whether you decide to stay a bachelor or a bachelorette forever is not the conversation we're having right now. We're talking about the fact that you are going to get older, hopefully one day, and you don't want to start paying for a policy then
Yes.
because it'll be a lot more expensive.
Right.
So do it for yourself.
Mm-hmm.
Do it for yourself. There's no one else involved, just you, and it's all about you right now
Right.
because you're single, right?
Yes.
So just do it for yourself because you'll thank yourself later. And like you said, Cynthia, something was very important. You lock in
Your health.
your health rating now, not after years of whatever you do to yourself
partying.
or partying, high blood pressure, low blood pressure, whatever may come, right? At an age when, it's not as desirable to buy insurance, so every reason you can think of is a good reason to call you, Cynthia. And I appreciate all of the knowledge that you've given us today. And I want our listeners to please, please, please just take a moment and make that phone call. It's an uncomfortable call to make because we don't talk about this. This isn't a subject that we like to talk about.
Right.
But make the call because you don't want your family to be uncomfortable should have something happen to you. And you don't want to be uncomfortable paying large premiums when you get older, you know. And we're focusing on young people today, but I also want families to know that just because you're 50 or 60 years old does not mean you should not call and have that conversation. Whether you're 50, 60, or 70 years old, still call Cynthia and have that conversation because you want your family protected. You want to make sure that the money that you have coming in stays where it should be. So Cynthia, thank you so much, so much for coming on and doing this show and for enlightening us. We'll make sure our listeners call you, and thank you again for coming on the show.